weekend all. Ira Epstein with your weekend edition of your metal market wrap-up. And this is for Friday, and this is the 7th of February, 2020, and we're just after the 2 p.m. time zone. We're not at settlement price. That's going to be at 4 o'clock, but it's already in. And you're down in this general area in most of the markets because today is a risk-off day. Now, what does that mean? It means the traders on the stock market, which had a dramatic run-up this week, are taking some money off the table. Some people are buying the gold market, looking at it and saying, what if there's more bad coronavirus news? They're buying the bonds, the notes, and the Japanese yen. It's what we call a classic risk-off day. That doesn't mean that you come in on Monday and the market can't be sharply the other way. You have 2 days where the market's going to be waiting for news on the coronavirus. This coming week, we also have Fed Chair Powell talking in front of the Senate Banking Committee, and he'll be asked questions about the threat to the U.S. economy. And of course, he's going to be asked about the strong jobs data that came out today. U.S. is rocking and rolling. I mean, even if you're marginally on the sidelines, there's a job for you. That's number one. And number two, people are getting new jobs. Could that back off a little bit in the coming week or two as we start seeing now the real impact of coronavirus on supply chains around the world as China can't ship out products? Yes. So got to be a bit cautious. Energy markets down a little bit. The world is waiting to see, is Russia going to join in or not with OPEC, and that's when OPEC will decide, instead of maybe the March 5th through the 7th date for their meeting, to pull it forward. I don't know, but that's one of the things the market's waiting on. So on this edition, every weekend, what we try to do is first cover a monthly chart for the bigger picture in the gold market, and then we move to all weekly charts. The daily charts are Monday through Thursday. So as we look at the chart, the analysis of it stays the same. Nothing changes. I'm looking to see, is the market got a pattern of a trend? And in this case, I have basis the swing line, which is this brown line. I have a pattern of higher lows, and I certainly have had higher highs. I'm bullish. Definition of an uptrend, higher highs, higher lows. Second, where is the market in relation to the key moving averages? The red is my 18-month moving average, the green my 100. It's over both. The bias is up. Number three, I look to see is momentum pointing up, down, or sideways. Not overbought or oversold on monthly charts or weekly charts. Momentum is still up. Therefore, I'm bullish. Another event happened. On the very long-term chart, the monthly, you've had a major crossover. The 18-month moving average of closes in red is so far in January crossed over and holding up in February. Traders will look at that typically and say they see a major shift in the market. And remember, moving average indicators are not forward-looking. They're backward-looking, but the market will interpret that normally as a bullish sign. When I go to a weekly chart of just closes, and the reason I do this, I'm trying to remove the highs, the lows. I just want to see on a closing basis what the market's doing. It's been in a thrust to the upside. It's over the 18-week average, and it's been in a bit of a correction. For the week, you're down $12. So even though you got a $5 rally on Friday, the market's still down. As you can see, the market has come up and been challenging this high that the market made. Now that high was what? That was a big week in this market. You remember what it was? I call it missile week, missile day. This is when Iran sent those missiles towards the U.S. troops in Iraq, and the market made a peak on that, and it's come back up to challenge it, and now we're getting what's called an outside week down. That means the market took out the prior week's high and low and closed lower on the week. When I take a look at the weekly swing lines, they're still friendly. You still have the pattern of higher lows, but now you have a lower high. And until this high is taken out, be it next week or the week after, I would then label that a bear trap. If it's the third week, it's just taking out a resistance point. This is an important point to me because as the week opens, you're going to see a peak form there unless you gap sharply higher come the opening of the next week. And, I don't know what coronavirus is going to do or not. What I do know is to get back to the support level of the 18-week average, you will break this uptrend. So if you take out to get down to this 18-week average, and remember, it's moving each week. It's moving about $4 a week on average right now. So let's assume it gets up to the 15, 13 level, something in that zone. You'd have to get through 15, 36.40 to do that would not be a good sign on the chart. You then have your lower highs, lower lows, stepping out of the swing line uptrend. The bias would stay up. What about momentum? Well, when I take a look at it, I can see where the market stopped on the rally. Here's your big surge, missile day, missile week. Market pulls back into the Bollinger Bands. 95% of the time, the market's going to stay within those bands. Market pulls up, pushing on the band, still pushing on it. Is it going to make a run for that high or not is the question. And right now it's saying, no, it's not got the power just yet. In terms of the momentum, though, the market's stalling. Do you see the red and blue lines? They're sort of curving over and going sideways right here. They haven't turned down. Therefore, I'm going to still go with the idea the bias is up since you're over the 18-week average. The trend is up as long as you don't take out 15, 36.40, and that is $34 away roughly. The market still looks bullish. On the gold-silver ratio, this is not a good news event for those that are looking for base metals to go higher. And as much as you want to think silver's a precious metal, it's really not. I mean, it's nothing in the price of palladium, platinum, gold market. No, copper's cheaper than it. That's about it. So as I look at the market, you've got a higher high on this. That's not good. So silver's losing to the gold market. You need more ounces of silver to get an ounce of gold. And as you can see, the difference in this market, the longer term than gold, you've got lower highs and a lower low. You have not taken out that week's high. Momentum is on the verge of turning down. And if this market closes under 1752, the 18-week average, you could have a problem in that the market might want to extend that rally. Who's controlling the market? Well, it's hanging by a thread is the right word to say. In the copper market, as bearish or bullish as you get, often this Bollinger Band, you pay attention. Can you get over it for brief periods of time? Certainly, when momentum's with it and the market's running. But a classic hard number for a market to get through is the combination of a 100-week average and an upper Bollinger Band. I am not saying you go short. I am saying I think longs take a look at that and they sometimes take money off the table. The market stalled in that area, went right up to a new high, still in that zone, and then it turned itself back. I think the pros were looking. Now if it goes down, what do you have? Well, let's first figure out where we're at right here. And this was January 24th. You have a higher high, lower low. The settlement's 268.40 under the 18-week average. So the bias is down, and I don't think you'd argue momentum is down. I am not saying it's trending down. I'm saying it ended an uptrend. Now the market lets go this week. Take a look, the 31st goes to the lower band. And I'm aware that people are bailing on it. Everybody's getting super bearish. But I'm a little different. First challenges of Bollinger Bands, upside, downside, it doesn't matter to me. I'm often saying I think the pros are going to take money off the table. And from the low this week of 248.75, got under the lower Bollinger Band. It's finishing at 254.70. I think that band, when it came in at 250.90, they did all right there by doing that cover. Now, the question is, what do you do going forward? If there's more corona to come, this market, in fact, all industrial metals will stay under pressure. If they say it's peaked and things are looking better, there's no further outbreaks, the markets are forward-looking. They may give you a spurt in them. We got to wait on the news. It's a hard one to call. In the platinum market, you had this run-up in the market until the corona hit. And from that point, you stalled right here, and you've been working your way down. This week's break low took this out. So it's the first time since this rally began with the higher lows, higher highs over the 18-week average, and it stalled against the upper Bollinger Band, and now it's stepped out of its uptrend. What about the palladium market? Same thing. With this break low now right through here this week of 21.71, you took out 22.0860. So I should have taken this arrow, and I just missed it, and have it pointing down. But there's something else going on. If we look at this week's high of 23.5750, it's over 23.48.60, agreed? So you've got a higher high, lower low. You haven't entered a downtrend, you've stepped out of the uptrend, the bias is up, and you got to be careful. If momentum wants to slip on, you get more of a correction. Where's this metal used? Autos. If the factories reopen, probably going to start getting demand for cars. If they stay closed, as many of the Asian factories are, in fact, supply chains all over the world, you got to be concerned that this is a pretty high price for that metal. In the dollar index, we've gone from break lows into swing lines to now the rally high. I'm a broken record. This is where I think the pros would be taking off. They haven't quite hit the upper band. They're about 5 points away from it, but you're in a zone. I'd be paying close attention come Monday, actually Sunday night's trade, as to what it does. The trend is up. The momentum is up. Bias is up. And you're right close to hitting your first objective. And if you take a look, when you've hit this in the past, this market has a tendency to stall out against that number. So I think everybody's going to be tuned that watches these type of markets come Sunday night. Now, come Monday morning, 5:30, quarter to 6 in the morning, I'm going to be on my computer telling my traders what the chart action is and so on. Sunday night, I write a newsletter for those of you that get my full subscriptions, and I'll already have covered everything for you. And there are times when I think there's such a wild situation, I'll put out an extra video even at night. What I do in the video is I typically cover 40 of the futures markets. This video, the morning subscriber, is dedicated to that. In my Spider ETF video, I cover the spiders in the ETFs of the stock market, and I put that out typically by 4 p.m. Central Time. For a temporary basis, because I've just launched my Spider ETF, I'm throwing them both together, and I'm giving you a couple of weeks free access to my Spider ETF for $7.95 for your introductory price. If you're already a subscriber, you know I've sent you out the notice. You're welcome to be looking at it for free until I decide to start charging for it. It's right around the corner, but it's not here yet for the Spider ETF. So you're going to get 40 charts telling you exactly what I think you do, where to do it. I'm going to say buy, I'm going to say sell. I'm not going to be talking, here's what I think the pros are doing or not doing. I'm not going to talk in these generalities. It's going to be much tighter. How do you get it? Try it. $7.95 for 30 days. Not going to break the house. What do? Go to our research area on our website at www.iraepstein.com. It explains it. I've got an introductory video as well. Sign up for it there, and we'll make sure you get everything. I'm Ira. You have a great day, and I'll see you all Monday.